Thank God it's Friday. Good morning and welcome to Business Morning. And just like that, we have done 220 minutes so far this week. Let's top that up with the last 55 minutes for this week. I'm Ini Jodmekwa. We start off with oil prices. It fell on Friday, set for their fourth weekly decline as renewed economic concerns on the United States and China ride anxieties about fuel demand growth in the world's two largest oil consumers. Brent crude futures dropped by 48 cents to $74.50 a barrel, while U.S. West Texas Intermediate crude futures went down 39 cents to $70.48. Both benchmarks are set to fall by about 1.1% for the week, which will be the longest streak of weekly declines since November 2021. With talks over with the United States government's debt ceiling stalled and renewed fears that another regional bank is in crisis, there's mounting concern that the U.S. will enter a recession. A decline in new loans to businesses in China and weaker economic data there earlier in the week refocused doubts about its recovery from COVID-19 restrictions driving oil demand growth. Additionally, cooler inflation data from both countries suggests that consumer demand was weak and that the market was not looking so good. The U.S. government has said it will buy oil when prices are consistently at or below $67 to $72 per barrel. However, the talks to raise the $31.4 trillion U.S. federal debt limit may not reach an agreement in time to prevent a government debt default, which could cause severe market dislocations. Still talking oil now, significant decline in crude production recorded last month has pushed Nigeria behind Angola as Africa's largest oil producer among its peers in the organization. The latest edition of the OPEC's monthly oil market report release shows that Nigeria's oil output dipped by 270,000 barrels to 999 barrels a day last month against 1.26 million barrels recorded in March, while Angola's oil production rose by 91,000 barrels to 1.06 million barrels a day. Before now, Angola overtook Nigeria as the continent's top oil producer in May last year. And again in May this year, we see this happening as the country faced the menace of oil thefts. Meanwhile, oil and gas analysts attribute the output decline on the shutdown activities of one of the country's major export terminals, the Forcados pipeline, as well as strike action at the local unit of ExxonMobil. Let's talk about edible oil now. Malaysian palm oil futures edged lower on Friday and were on course for a weekly drop, tracking losses in rival Dalian and also dented by concerns of higher production in larger producer Indonesia. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange slid 33 ringgit, that's about 0.92%, to 3,570 ringgit a ton. It fell for a third consecutive session to its lowest since May the 5th. For the week, the contract has declined 0.86% so far. Dalian's most active soy oil contract fell 1.2%, while its palm oil contract lost 2.1%. Soy oil prices on the Chicago Board of Trade were up 0.1%. Now, let's see what's happening with wheat. Chicago wheat futures rose on Friday after 4 consecutive sessions of losses as bargain buying supported prices, although expectations of ample global supplies capped gains. Soybeans edged higher while corn was largely unchanged as slowing U.S. exports kept a lid on prices. The most active wheat contract on the Chicago Board of Trade added 0.9% to $6.33 a bushel. Soybeans rose 0.3% to $14.09 for half a bushel, and corn was unchanged at $5.82 for a quarter of a bushel. For the week, wheat is down 4.1%, corn has given up 2.3%, and soybeans has lost nearly 2%. All three markets closed higher last week. Falling demand for U.S. supplies is weighing on prices, according to the U.S. Department of Agriculture, and that weekly export sales also of corn totaled just about 340,000 tons. Wheat export sales were 359,000 tons, and soybean exports came in at 300,000 tons. Analysts are expecting the report to show that supplies of corn and soybeans will rise sharply in the coming year. In the wheat market, talks over the Black Sea export deal remains at the center stage, even though plentiful global supplies are keeping a lid on prices. Ukraine, Russia, Turkey, and the United Nations discussed yesterday, Thursday. United Nations proposed to extend a deal allowing the safe Black Sea export of Ukraine grain, while Moscow has threatened to quit on May the 18th over obstacles to its grain and fertilizer exports. So back here in Nigeria, Seplat Energy PLC, which is a leading Nigerian independent energy company listed on both the Nigerian Exchange Limited and London Stock Exchange, has held its 10th annual general meeting in Lagos, Nigeria's commercial capital. The chairman of the board, Mr. Basil Omiyi, while conducting proceedings at the AGM, says that Seplat's revenue rose by 29.8% to $951.8 million, while profit before tax rose by 15.3% to $204.4 million. For the financial year end December 2022, a dividend of 15 cents per share is to be paid to shareholders of the company.
Seplat Energy PLC is holding its 10th annual general meeting for the year end 2022. To allow for increased participation among shareholders and stakeholders, as a dual-listed company in Nigeria and London, it has opted for a virtual meeting.
This meeting is being held virtually in compliance with the Business Facilitation Miscellaneous Provision Act that was passed into law on the 8th of February 2023.
The company's total revenue rose by 29.8% to $951.8 million, while profit before tax rose by 15.3% to $204.4 million.
We have started 2023 on a very strong note, closing our Q1 2023 at a very strong performance level, and we're looking forward to a good outcome for the entire year 2023.
Leading to the part shareholders like to hear. So, with the healthy financial performance and solid cash position, the company's board recommended a special dividend of US5 cents per share to be paid to shareholders, in addition to the final quarterly dividend of US 2.5 cents per share, bringing the total dividend for the year to US 15 cents per share, or 34 naira 67 kobo.
In the absence of questions, I hereby propose that the final dividend at the exchange rate of 17th April 2023. Will a shareholder second?
Mr. Chairman, my name is Mrs. Bisi Bakari. I second the motion.
Seplat play in the upstream sector, but has its eyes firmly fixed on midstream and new energy development.
We're looking at gas to power, we're looking at renewable energy, especially big emphasis on solar. There'll be an announcement at some point in time when we'll make final investment decision on the renewable energy portfolio.
Our success rests on the quality of people we have. We are very committed and strong quality people, and we have a really strong work ethics and culture. I think that's really what's helping the company in this, what I call, very difficult time. It's a differentiator, and unless you do that, you can't really think of growing. Now, you know, we are thinking of growing, so we start from building the people and the culture and the technology we need, and then we are ready to go.
The focus, they say, is to increase access to energy, reduce emissions, and transform the economy.
All right, now let's move on. Very close to that, counting down to May the 22nd, as Africa's biggest oil refinery and the world's single train facility, the Dangote Refinery, which has a capacity of 650,000 barrels per day, is sufficient to meet Nigeria's need. We count down to its commissioning on that day, which is May the 22nd. The Director General of the Lagos Chamber of Commerce and Industry, Dr. Chinyere Almona, views the refinery's impact on the Nigerian economy as significant and believes it will save and generate foreign exchange. The refinery will create jobs, positively affect the value of the naira, broaden prosperity for the downstream sector, provide growth opportunities for businesses, stimulate economic growth by impacting the country's balance of payment, and a whole lot more. The Chamber expects the refinery to fuel further growth and development across its value chain, including cosmetics, plastics, and textiles. A whole lot of expectations we see even before the commissioning of that refinery. So sometimes we even have to, let's manage our expectations. But let's see, apart from the LCCI, what Kelvin Emmanuel says in this refinery that we have been expecting, and hopefully in the next 2 weeks, I think, the 22nd, it should be commissioned and we should begin to feel the impact. Kelvin Emmanuel joins us from Abuja studio. Hi, Kelvin. Good morning.
Good morning. Thank you so much for having me.
Yeah, so I don't know if you heard some of those expectations from LCCI, a whole lot, from affecting positively, of course, the value of the naira, to reduce the pressure and need for foreign exchange, even going as far as the value chain, the cosmetics, plastics. What do you see in this refinery, that we're counting down and so excited about?
Well, I have very high hopes for the Dangote Refinery. And the reason is because if you look at the budget of Nigeria, you see that 32.4% of the budget goes into under recovery for petroleum subsidy. Today, as we speak, over 70% of the budget, somewhere around 71.4%, if I'm not mistaken, goes for two items. Goes for subsidy payments and for debt servicing and refinancing of maturing debt. So only 28.6% of the budget in Nigeria today, as we speak, is left for any other business, which are the very critical things like defense, education, healthcare, etc. So one of the advantages of the Dangote Refinery, according to sections 205, subsections 1, sections 206, subsections 2 of the Petroleum Industry Act of 2021, is that you're going to finally have free market pricing, and you're going to have regulation on transfer pricing for any company who decides they want to compete with Dangote, which I don't think they can because of the 27% handling charge on landing costs for delivering PMS in Nigeria. And it's also very interesting because, following the embargo on Russian oil before the February 24th, 2022, Russia was supplying the European Union 1.7 million barrels of crude oil on a daily basis. And following the embargo of Russian oil and the removal of Russian banks from the SWIFT global system of financial communication that has 12,000 banks as members, you have the fact that Russia can no longer deliver crude oil feedstock to refineries in the Netherlands, in Belgium, in the UK, in Germany. And that's the reason why you saw that the price of PMS went from 165 naira per litre, it went to 195 naira per litre, because the price at which the Nigerian government was able to get in PMS in Nigeria based on the DSDP arrangement actually went up. You could also see that the price of diesel went up 300% over the intervening period, because those refineries in Europe that Nigerian off-takers were getting PMS from and diesel were struggling to get feedstock from Russia, which they usually get. So with the Dangote Refinery, I expect that at full capacity utilization, you're going to see a daily output for PMS of somewhere around maybe 47 to 48 million liters of PMS. You're also going to see that the true north for the consumption of PMS on a daily basis, contrary to what the government reports that we consume, is actually not 66 million liters of PMS daily. I maintain my stance that Nigeria does not consume up to 50 million liters of PMS on a daily basis. And if the government has an alternate view on this, they should provide empirical evidence to back the fact that Nigeria consumes more than 50 million liters of PMS, because like 8 years ago, the government was reporting 34 million liters. So how can you tell us that between 2015 and 2023, that number went up from 34 million liters to 66 million liters, and Nigeria is practically having to pay 7 trillion naira in subsidy payments, which is about 32.4% of its budget. So I expect that the refinery is going to change fiscal and monetary policy in Nigeria, because the pressure to borrow money to pay PMS subsidy in contravention of sections 45 to 49 of the Fiscal Responsibility Act of 2007 will stop. The downside, though, is that with the deregulation of petrol prices in Nigeria and introduction of free market conditions, you're going to have a situation where the price of a liter of PMS is going to go up. In sub-Saharan Africa, it's interesting to note that the price of a liter of PMS is actually between $1.10 and $1.29 per liter. Now, there is a 27% handling charge for bringing PMS into Nigeria. So if you have the price go according to free market conditions and it gets to that level, you're going to see a situation where the only net benefit of the Dangote Refinery coming on stream is a removal of that 27% handling charge. And of course, the central bank is not going to be providing anybody who decides to import with dollar at the official market. In fact, the central bank has started a systematic devaluation of the naira. It's revised the airline in the FX rate, for example, to 634, and is systematically devaluing the naira. And I expect that that will continue, and the central bank will announce that they've changed their exchange rate regime from a fixed peg to a floating model. So there are advantages, but also I see that there are going to be some downsides to the price, the increase of price, and it's going to affect inflation. But I expect that the debt situation of Nigeria is going to improve and is going to change the direction of monetary policy going forward. Dangote Refinery, I mean.
Okay. So I guess it's also important to know, is Dangote compelled to sell all his products to Nigeria? Because Dangote is obviously a business. I'm sure there are loans involved. I do know, I think they had a commercial paper or something like that recently. So are they compelled to sell all of their products to Nigeria? And how do they run this as a business? It's not a welfare company. It's a business that needs to take care of its capital and running costs, salaries, and of course, make profits.
Well, he's not compelled to sell. The fact that NNPC holds a 20% stake in the refinery and sits on the board, and NNPC has said it's going to provide crude oil feedstock that's Bonny Light through barges that we buy. We send through barges from the Niger Delta to Lekki. What the NNPC has not come out to say expressly in an official statement is if that crude oil feedstock will be provided to Dangote in dollars or naira. That will determine whether he's going to sell his products, all of his products in Nigeria. But it's also worth mentioning that, look, every barrel of crude oil gives you about 170 liters of derivatives. PMS is only 43% of that 170 liters, right? You have other derivatives like automotive gasoline oil, AGO. You have aviation turbine kerosene, ATK, which is used for jet engines. You also have Jet A1. So there's Jet A1, then there's ATK. You have derivatives like DPK, dual purpose kerosene. You have non-transportation fuels like heavy marine oil. You have petroleum coke, which is used to make plastics. Most of the canned drinks you take, the container is actually made from petroleum coke, which is the reason why sometimes when the climate activists come and talk about phasing out crude oil, I wonder if they understand that there are other uses of crude oil outside of carbon fuels like PMS and diesel and the likes of them. So you have a situation, for example, where most of the ships that come to Nigeria will not need to, most of the ships are not powered by LNG, because nowadays you have ships that are powered by both heavy marine fuel and LNG. Most of them are dual hybrid powered, and they have storage on the ships. So when they come, they usually don't have any source for heavy marine oil fuel in Nigeria, so they have to use the storage they have and then sail back. Most of the ships that come to Nigeria will now have heavy marine fuel oil from the Dangote Refinery to be able to transport themselves back. So it's a market for him. So you have several other derivatives. You have lubricants also. In fact, one of the reasons why lubricant price has been so expensive and has gone up. I remember in 2021 when our farm was doing land development, we're practically buying 25 kg of lubricants to power the bulldozer on a weekly basis. I remember it's about 35,000 naira for 25 kg. It's gone up seriously. With Dangote Refinery coming on stream and in producing lubricants, you're going to have a situation where the prices will come down because of the cost of landing lubricants in Nigeria because of the exchange rates. So there are several other derivatives outside of just PMS, AGO, aviation fuel, Jet A1, ATK, or aviation turbine kerosene that he's going to be selling. But for PMS especially, the decision to sell PMS in Nigeria, all of it depends on if he does his cost-benefit analysis and see his foreign exchange, see the exchange rate policy that the government has, if government can float the exchange rates, he sees that it's actually going to profit his dollar loans because he has dollar loans that he has to pay. And the fact that there's been distortion in the FX market was a reason why Dangote decided to go to the debt capital markets to raise about 300 billion naira in 2022 to finish the refinery. I expect that he's going to have a right of first refusal. NNPC has a right of first refusal to get 20% of what he produces on a daily basis, especially for PMS, to Nigeria. And whatever agreements NNPC and Dangote, the board of the refinery, reaches on the remaining 80% will depend on negotiating power. But the answer to your question is he's not obligated to sell all of what he produces to Nigeria. But it's also worth mentioning that PMS is one of about 9 or 10 different derivatives that he's going to be producing. And it's also worth mentioning, I'll explain something to you that is quite unique. The Dangote Refinery has a Nelson Complexity Index of 10.5, which is the second highest in the world, outside of the refinery that is owned by Reliance Industries in India. Now, the next Nelson Complexity Index typically tells you how sophisticated the refinery is and the ability of a refinery to break those hydrocarbons of the petroleum crude oil feedstock into complex derivatives. Now, you notice that for modular refineries, they are unable to produce PMS. They produce naphtha. Naphtha is the base for PMS. And the reason is because they don't have coking units that can break those hydrocarbons into secondary and tertiary derivatives. The Dangote Refinery has. The fact that it has, it means that it's going to be producing PMS, AGO, ATK, Jet A1, DPK, lubricants, petroleum coke. In fact, bitumen binders. Nigeria, last year, Nigeria spent nearly 400 billion naira importing bitumen binders or asphalt, which is used for road construction. So the fact that Dangote has come on and at full capacity is going to be doing about 3.3 million liters of bitumen binders on a daily basis is going to impact on the cost of road construction per kilometer in Nigeria. And Nigeria has about 120 kilometers of roads to construct.
Yeah, well, we're going to talk about that in our second conversation, Kevin. But, you know, you talked about all of these derivatives, and of course, it just gets Nigerians even more excited. But just to draw your mind back, that we do have, I know we're all excited about Dangote fertilizer also, but even when it came on stream, we still had farmers complaining about cost of fertilizer, access to fertilizer. So, I mean, you know, how do we ensure that all of this, especially the derivatives, because a lot of eyes are on the petrol, but the derivatives that could, you know, create jobs, take care of the roads, the lubricant and all of that, it could just be there? or it could actually be sold out, I mean, in its raw form, because of course, they also require their own processing before it can be used and add a lot of value to whatever expectations we want to have in the country.
Well, the issue with fertilizer is important for Nigerians to understand that NPK fertilizer, nitrogen, phosphorus, and potassium is made of 3 different components. Nigeria has only one, which is nitrogen, ammonium nitrate gas that is piped by subsea pipes from the Niger Delta all the way to its refinery in Lekki. That can only produce urea. It doesn't have phosphates and potassium. I think late last year, Dangote signed an agreement with the government of Togo about exploring phosphates in Togo as a feedstock to be able to add the second component to the 3 components. Now, globally, Morocco, the OCP Morocco has about 70% of all the production output for phosphates in the world. Yeah, and the government of Morocco has a state-owned enterprise called OCP that mines and processes phosphates for distribution. Last year, they made $12 billion. Nigeria has phosphate deposits, but like with every other thing, it's in potential, it's in rocks, it's not mined. The government is not paying attention to it. Dangote needs phosphorus, it needs potassium to be able to produce NPK. Potassium, the major producers in the world are Russia, Ukraine. Russia and Ukraine alone control about 40 to 45% of the global potassium supply, which was the reason why when the war started and the Odessa seaport and the Crimea seaport were blocked and the Black Sea commercial ships could not navigate around the Black Sea, there were issues going through the Bosporus Channel, which takes ships from that Black Sea out into the Mediterranean. You saw that the price of fertilizer went up, and Canada controls about 35 to 40% of the global supply. So that pressure was on Canada. They could not raise their production output, and the price of fertilizer went up. So you see that with the Presidential Fertilizer Initiative that is managed by the NSIA, you see that they have problems with the cost of phosphorus and potassium, which are the 2 components for blending fertilizer. About 72 blending plants in Nigeria for fertilizer. They have problems with the exchange rate. They have problems with the cost of it that went up. And that's the reason why the price of fertilizer, for example, went up from 11,500 naira per bag to somewhere around between 30 to 32,000 naira today. I expect that if anything happens to the exchange rate for that, the price will continue to go up. So we can't really say that, the Dangote fertilizer plant came on and fertilizer price has not improved, because a lot of people don't understand that the raw material for actually making fertilizer, all of it is not available in Nigeria. Nigeria only has about 30% of the raw materials.
So are we assured that these derivatives, we would get them from this refinery?
Well, yes, we are sure that we'll get the derivatives from the refinery because, like I said, it has a Nelson complexity index that is high, that is able to break that hydrocarbon into secondary and tertiary derivatives. So we expect to get about 9. But it's also worth mentioning that there's a difference between light crude, which is what Nigeria has, burning light, and heavy crude, which Nigeria doesn't have. The price of heavy crude is going up, and the fact is that you can actually get more derivatives from heavy crude than you can get from light crude. So I'm also looking at a situation where the board of the refinery might decide that they want to import heavy crude into Nigeria so that they can refine into secondary and more tertiary derivatives to create more value for the company. But again, my concern, because we talk about potential, we don't talk about concern. My concern is on the quality of the petrol that is refined. Okay. The Dangote Refinery has released a statement that it's going to be producing a petrol quality that is between 93 and 95 parts per million for its octane level, which is the purest form of petrol, and has a sulfur content of 10 parts per million. And the reason why this is important, I'll tell you the reason why this is important. Nigerians realize when they travel abroad that the air is cleaner. The air is cleaner is because the fuel that is burned from internal combustion engines from their cars has a higher fuel-to-air ratio, and it doesn't produce nitrogen oxide as much and carbon monoxide, right? I'll dare tell you this. most of the fuel that is imported into Nigeria under this subsidy regime will not pass environmental protection tests in Europe and in the US. If the fuel that they bring into Nigeria is sent into Europe, the governments of the EU and the US will not allow the fuel to come in because it will not pass. If standard organizations were up and running, it will take a sample from every fuel brought into Nigeria currently to a lab to test for two things. Number one, the octane level. Number two, the sulfur content. Because when the fuel to air ratio, when the fuel is higher than the air ratio, what happens is that the nitrogen oxide and the carbon monoxide you produce is higher. And what happens typically is that you have more carbon gases and the spike of the pressure in the engine of the cars goes up, and the quality of the engines reduces over time. The car doesn't last long, which is the reason why cars last longer abroad than they last in Nigeria. My second concern is on Lagos State's Environmental Protection Agency. There is a global benchmark for how refineries are run around the world. It says commercial residential properties are not to be sited within 48-kilometer radius of a commercial refinery. I see a lot of real estate developers around the Beju marketing properties and saying that the unique selling point
of course, it's even a selling point, as you noted, Kelvin. But Kelvin,
that is something the Lagos State government needs to address.
Okay, all right, Kelvin. I mean, we're totally out of time, but I mean, it's Dangote Refinery we're talking about, and we know that it's just coming up. So we will see more concerns, more benefits, more costs, and more topics to discuss when it comes to this refinery. After all, it's the first in Nigeria, so we have to learn a whole lot from it. Thank you so much, Kelvin Emmanuel, our financial expert, for your time this morning.
Thank you for having me.
Let's take a quick short break. We'll be back to discuss financing infrastructure. Welcome back. Let's talk of infrastructure development in the country now. We've been told by World Bank that it will cost the country between $100 and $150 billion every year for the next 10 years to cover that gap. That was discovered by the Multilateral Investment Guarantee Agency, which is an investment arm of the World Bank. We also have others saying it will cost about $20 billion. That's from the federal government. Every year, we have those saying it's 615 trillion naira, a whole lot. But for this year, 2023, we have 5.47 trillion naira for capital projects, not scratching the surface at all. And we've seen the federal government bring up a lot of policies in its efforts to cover this gap. How far have they gone? Have they been able to reach anything? And we do have those plans and policies also. But let's get the views of Dr. Nemeka Obiariri. He's an investment banker, joins us virtually this morning to discuss this. Dr. Obiariri, good morning. So, we hear so many huge figures, discouraging when we compare it to our reality and what we have in the budgets for 2023, at least, which is just about 5.47 trillion naira. But I mean, we have a lot of policies. We have the tax credit scheme, which I think the NNPC is doing its second phase now. We do have that revised National Integrated Infrastructure Master Plan. Sometimes it just sounds like this beautiful ideas end up on paper, celebrated on television, ribbons cut, and then we're back to normal. Can you hear me, Dr. Obiariri?
I can hear you now. I can hear you now.
Okay, you can hear me now, so you didn't get the question, yes? So.
Yes, I get the question.
Okay, so I'm asking, how far have we gone? We have the tax scheme for infrastructure development. We have the master plan, the revised National Integrated Infrastructure Master Plan, which is supposed to take between 2020 to 2043. I mean, we don't seem to hear a whole lot about that now. We see NNPC now, a lot of people have criticized them that, can you please face your petroleum and leave the road construction and all of that. But all of this put together, how can we, let's assess, especially for this administration that's coming to an end in a couple of weeks, less than 3 weeks, How have they done when it comes to infrastructure development? How far have we gone as a country?
Just to thank you very much for having me. Nigeria is not short of ideas and policies, but the physical structures, the constitutional structures, and the quality of leadership that we have across the 3 tiers and arms of government have been the greatest impediment to our development. The reports out there, in fact, as early as 2007, under Okonjo-Iweala, this World Bank report has been there that for us to be able to fix the infrastructure we have in Nigeria, we'll be able to spend at least $3 trillion over the next 30 years, which is $100 billion per annum, which is correct, because if you run the numbers, you will see across sectors, scientifically driven, we will require at least $100 to $100 billion annually. And I will explain this to you. Let me just not digress. You ask about the performance for the federal government of Nigeria. I will take them up on one aspect. In 2017, April to be precise, the federal government of Nigeria with fanfare launched the infrastructure and the economic recovery growth plan, ERGP, a 143 pages glossy document. And one of the key provisions of that document was that between 2017 to 2020, December 31st, that they would do 2 million housing units and set up housing development fund of about 1 trillion naira. We are in 2023, 3 years after that expiration of the deadline that they gave. Where is the 2 million housing units they promised us? And where is the 1 trillion naira housing fund? In fact, last 2 weeks, they launched gleefully, celebrated 743 housing units out of 2 million housing units that they promised us. To fix the housing infrastructure in Nigeria, the other day, Fashola was on air, I think it was on Channel TV or I can't remember the channel, and he was angry. Somebody asked him about the number of housing deficits in Nigeria. Some have banded the figure of 20 million units, some have banded the figure of 28 million, some have said 17. And he was so angry. And he was so passionately angry against the person that we are interviewing him and was saying to them that nobody is sure of the number of housing deficit. For 8 good years, Fashola was Minister for Housing. It did not occur to them that if there were no adequate research on the number of housing deficits in Nigeria, they should have been paneled one over the last 8 years. Because you cannot solve a problem, you do not first of all research to know the root cause and how to solve it. To solve the housing problem in Nigeria, we require almost about 300 to 400 trillion naira over the next 30 years. To solve the road infrastructure problem in Nigeria, we require consistent investment. If you look at Nigeria today, we have a landmass of now around 23,000 square kilometers. Our road network is about 200,000. The only built element of it is about 50,000. South Africa, 1.2 million square kilometers. Road network of about 750,000 kilometers. Paved of almost about 200,000 kilometers. Even Pakistan here, with a road with a landmass of 762,000 square kilometers, have road network of about 268,000 kilometers and paved of 185,000 kilometers. Road infrastructure, housing infrastructure are key and critical infrastructure needs of any nation that want to develop, especially that of Nigeria. To fix the road deficit in Nigeria, we require consistent investment of about 1.5 to 2.5.
So Dr. Biari, one would be tempted to ask, is the problem about the funding or the policies, or is it just the implementation? For instance, let's look at Lagos-Ibadan Expressway. It's been under construction and rehabilitation like forever. Is it funding that is the problem? We've seen the money being celebrated and allocated, but the job just doesn't come to an end.
Let me come here. It's not the issue that we have, is the issue that centers around our constitutional, structural, and physical deformities. I will explain this to you. Between 1960 to 1966, we had the greatest infrastructure revolution in Nigeria. Remember, at this particular golden period, there was no crude oil for us to harness. Most of the infrastructure that we developed in Nigeria were done using resources from agriculture, from coal, from cement, from cotton, from granite pyramid and all those stuff. Do you know why it worked well then? We had a constitutional and physical arrangement that allowed the regions to control their resources and pay 30% to the national treasury and 20% to the federal government, and they retained 50%. So it enabled the regions to compete. In fact, there was no attraction for anybody to go to the center, and there was no corruption as we have it today. That was why Ahmad Bello, being the leader of the NPC, refused to become prime minister. He sent his younger colleague, Tafawa Balewa, because he preferred to stay in the north to develop the north. The problem we have, Nigeria has capacity to produce and export goods not less than $300 billion annually, compared to the $47 billion we are doing. Why we have not been able to harness resources to be able to put the solution, not because of our physical deformities. And we have argued this thing. As long as we are operating the kind of constitutional and physical arrangement that we have, there is no way we can unlock the huge potentials in this country. I'll give you an example. Land constitutionally is under the control of the states. Why are the federal government still involved in road and other things that has to do with the control of land infrastructure? If we have the kind of constitutional and fiscal arrangement that we have in place, we talk about the tax credits. I've argued it's a good innovation. But ask yourself this question. Tax in Nigeria is centralized, which is not supposed to be so. There was a time the governors of River State went to court to challenge the tax being a centralized thing. And I will give you an example. If taxes are centralized and the whole things are contributed into a pool, on what basis, under what structure? This when you give tax credit, you're going supposed to come to traditional account. The structure does not make it right, and that is why we are not sweating it.
Okay, Doctor. All right, Dr. Obiariri. Thank you so much. It's so deep. I mean, we have moved from, the issue of constitutional amendments and all of that, running of the country generally. So, well, we have a new administration coming up, so we'll keep the conversation going, and hopefully they will listen, and some of these necessary changes will be effected so that we can see a change in the country. Thank you so much, Dr. Nnaemeka Obiariri, investment banker, for your time this morning.
Thanks for having me.
All right, so let's head straight to the markets now. Will has been standing somewhere around there. Now I've been taking a little bit of her time. So let's hand it over to Will. Now, Will, I won't take any of your time anymore. Please just have your time. Head to the market. Good morning.
Banker is speaking, so let me let him speak. Good morning. So we see that the fixed income market, we're just going to jump right in. We did see some bullish sentiments in the markets. Still yields going down. Some analysts did say earlier this week that we should expect very sentiments as positive uptrend in yields, but that has not been the case. Now we're just going to have, just looking at it, we see that average yield contracted by about 6 basis points for the bonds market. If you look at the NCB market, we see that it's also contracted in that space by about 6.7% in the NTB market. That's still not good, especially when we had the NTB auction on Wednesday. I think that was a reflection of what took place there. But we're going to bring in Chuka Nwachukwu, Head Asset and Liability Management, UBA, to give us a bit of a background and highlights of that auction. Good morning, Chuka. It's good to have you on the program. Chuka, are you there? Can you hear me?
Morning. Good morning. I can hear you.
Okay, great. So I was just talking about the primary market auction that took place on Wednesday for the Treasury bills, and the DMO did offer 143.9 billion naira worth of paper. We did see an oversubscription, but in terms of stop rates, not very appealing. Can you give us highlights of that auction? What happened?
Okay. Yeah. Okay. Thank you. So, like you rightly mentioned, we had the NTB auction on Wednesday, where a total of 143 billion was offered and sold. We saw a subscription of well over 820 billion. That actually, like you mentioned, made it oversubscribed. But again, we saw this significant decrease in rate. For example, the 1 year, we saw it drop from 10.17 to 8.99. That's about 118 basis points drop. This is as a result of huge liquidity in the system. The system has liquidity in the system has greatly improved over the past 1 week or two. For example, we've seen the system liquidity open as high as 7 to 800 billion, and this has stated the buying interest we've been seeing in the market, especially at the auction.
So we see that the CBN just offered the 143.9 billion. Why did they stick so strictly to that amount and not even go above it?
Yeah, that has been the pattern over the past few auctions. I believe that the CBN is basically trying to also get people in interest in the on the bond side. And if you notice the government pattern, they clearly stated that a huge percentage of the of borrowing is going to come through the local market, especially on the TBO side and the bond side. And so they want also interest on the bond side, and that is why I believe that they've sold exactly what they offered, just to make space for the bond auction next week, Monday.
Okay, speaking of the bond auction, should we expect a similar outcome as what we're seeing for the bond? And you did say that they're giving room for more buy in the auction market, the bond market. What do you project? What are your expectations for that auction on Monday?
Yeah, on Monday, like you mentioned, there will be bond auction, and then across 4 maturities of 2028, 2032, 2042, and then 2050. Now, we believe that due to the liquidity in the system, the bond auction will go the same way as the NTB auction. People will obviously look to buy on the longer end, which is more attractive, the 42s and the 50s, and so we might see a decrease in the rate on that side of the auction. The 42, for example, the last auction came out at 15.4. 50 came out at 15.8, and these bonds are currently trading around 15.2, 15.5 levels. So I believe that the next bond auction, due to the liquidity in the system, will be oversubscribed, and then we might see a significant drop in rate.
Thank you so much, Chuka Nwachukwu, Head Assets and Liability Management, UBA, for sharing your insights on the program.
Thank you very much.
So we're just going to end off with what happened at the equities markets, 0.09% down. So we're seeing, more buy in the markets. Market breadth was a bit positive. It was just 27, I think 22 gainers to 20, losers. So I think we're still
stay
ahead.
Hopeful, Will. Stay hopeful.
I'm still staying hopeful.
All right, Will. Thank you so much. Well, let's head to London now, where Juliana is standing by with not very good news, I think. Good morning, Juliana. A sluggish growth for the UK in the first quarter, just 0.1. That's so marginal, but I guess it's better than a negative.
It's certainly better than a contraction. Good morning, Inni. I think the Chancellor, Jeremy Hunt, will be breathing a sigh of relief, because we have had that data, as you said, from the Office for National Statistics, looking at quarterly growth at the start of 2023. And there was some growth, 0.1%, but the economy is still very much limping along, and the streak of slow growth figures does continue to come out of the ONS. We look at January to March, which of course is Q1, but you have a look at Q3, March. It actually dipped slightly by 0.3%, and that's because there's been a deduction in the amount of front-facing consumer services, and we know that the UK is a service-based economy. This data comes after we had that interest hike yesterday at the Monetary Policy Committee meeting from 4.25 to 4.5%, and I think as well the Chancellor is taking away some of those notes from Andrew Bailey, the Bank of England governor, and he did say that he does think this year the economy will grow 0.25% and a further 0.75% next year. But, that's kind of too little too late. I think if you go back to the beginning of the year, some of the Prime Minister's key pledges for the country was to grow the economy, and we're just not seeing that just yet.
Yeah, but I don't know if this is good news. Supermarket chiefs are saying that they think food prices will start reducing. Do you also see that?
Well, we're definitely not seeing it, unfortunately. And you know what it's like when you look at data. Data does distort. Data doesn't necessarily trickle down to the masses. But this is all about a phone conversation that took place yesterday between senior ministers across a board and supermarket chiefs. And they are talking about inflation because Andrew Bailey did point yesterday towards the fact that food price inflation, which is currently at its highest in 45 years, is one of the reasons why we can't get rid of the stubborn double-digit inflation. We did have data from Kantar, I believe, earlier this week, and it does show that in the month of March, food prices rose 19.5% year on year, and it's on the big staples that these are not luxury items. This is what you would use to feed your family, right? Bread, cereal, pasta, tinned items. That's the issue. So they did have a phone conversation yesterday. Lots of the big supermarket chiefs are confident that because of the fall in energy prices that they will be able to start trickling down those lower prices to customers. And they did say on that phone call that they believe that we could have reached the peak, which is good news. But, we've reached the peak. Is the peak going to start dropping? That is the issue. In fact, the Liberal Democrats, who are also part of that call, they are the third largest party here in the UK. They're actually asking for the Competition and Markets Authority to get involved, to put pressure on supermarket bosses to ensure that they are not preventing, customers getting the discounts that they're obviously seeing at the wholesale level. Yeah,
well, I guess another question to that will also be who determines the peak? When do we hit the peak? When do we know we've gotten to the peak? But, we'll just see. Thank you so much, Juliana, for your time this morning.
That's not for us. That's not for us, Innie. Yeah,
yes, it's not for us. All right, so let's move over to another market now, the crypto market. I don't know if they've hit their peak yet.
Maybe talking about sluggish movement.
Oh, you're still neutral.
Yeah, quite sluggish.
Very, very.
And
like
Red Friday.
Like the UK GDP?
Exactly. Even more sluggish than that. 49 points. Neutral. Talking about the sentiment. Fear grid index in the market showing that traders are getting kind of fearful in that market. Let's look at the top cryptocurrencies we track. We see Bitcoin there. Big drop Friday, Red Friday, 4.79%, $26,219. Bitcoin lost the 27K level, hit that $26,100 level, and we see big drop there. With altcoins also bleeding out once Bitcoin, we see that volatility with Bitcoin, Ethereum, 1,700, losing that $1,800 level, also down 4.49%. BNB, as the native coin for the Binance Exchange, that's down 3.14%. Might lose that $300 level going forward. Cardano, 36 cents, down 1.69%. So we see it's a bleeding market we have for Friday. Let's bring in Michael Inaji now, financial market analyst. Hello, Michael.
Larry, good morning.
Morning.
Thanks for having me on.
Yeah, Michael, it looks like regulation in the U.S. is getting more tough right now. We're seeing more market makers leaving the U.S. At this time, leaving crypto trading in the U.S. That's Jane Street and Jump Trading. They're leaving now. What's the story behind that?
So basically, these are one of the two largest institutional market makers. And the purpose of market making is to basically create liquidity in markets to allow market participants to easily get in and out of positions. And so basically, when you see two institutions like this winding out of the United States, it doesn't bode well in terms of traders getting better access to markets in terms of deploying their positions in good size. So what you'll see as a byproduct of this is eventually when we do start going up, there'll be less liquidity. And so what that means by byproduct is the price swings will be more volatile. So yes, it does mean we will go higher whenever we resume the bull market again. And it does mean we will go lower actually when we do go lower. So this movement, this motion that's been set in place it is a tad worrying too as well, because for these institutions to be leaving the U.S. shores, Jump Crypto saying, Jump Capital, Jump Trading saying that they're going to be basically moving all their crypto operations out of the U.S. They will be focusing on international, and Jane Street ceasing all crypto operations everywhere. That's to be said. Maybe, SPF, being a former employee of theirs, didn't bring the best light to them, and so they just want to remove the entire association with that business because of the taint that he caused. But this is really not a good development, because these market participants they're a huge boost to the industry, because they just have liquidity, and a market can't live if it's not liquid. I think this is a real indication as to the lack of clarity that Chairman Gensler has created by butting heads with the CFTC. There's no reason why we shouldn't have any clarity yet, or any kind of new regulation that hasn't been pushed through Congress, because I think this technology, like I've repeated multiple times, is pivotal to the national security interests of the United States, and it's a shame to see them force it offshore, really.
Right, I guess more for Gary Gensler there to think about, talking about the SEC in the U.S. Thank you so much, Michael. Enjoy the weekend.
Thank you. You too now.
All right, so we see the top gainers. XRP, that's top in the counter, 0.79%. Lean gainers counter is what we have today, showing how red the Friday is.
Yeah, so lean is manageable.
Yeah, we can take lean.
All right. Thank you so much, Ladi.
Right.
See you at 1:30. That's it on the program today. Thank you so much for being a part of this 5 times. Great one. We'll do it again next week, but I'll see you during the news at 10 for stock market report. And remember, tomorrow, 7 p.m., you're going to have a summary of what happened in the market in Nigeria and around the world. I'm Ini John McQuarrie. Have a great weekend.